Welcome to today's presentation, where we have the pleasure to present Sampo Group, a new stock on the Danish market, but very well known in the Nordics. So at least we thought here that we would give people some possibilities to ask a question. You have had a lot of new Danish shareholders. So I was through today's presentation. We are joined by Head of Investor Relations, Sami Taipalus. Q3 results, of course, is the agenda for today, but I think we will do a short presentation and then we will jump into some questions to kind of try and get through it. But for now, I think I'll hand the call over to you, Sami.
Thank you, Mikael. And before I sort of go into the result, I guess it's worth briefly touching on the top Denmark transaction that we have now completed fully. Obviously, the most of that happened in the third quarter, but then we completed the squeeze out in the early part of October. What's happened so far is obviously not that much yet. We've started with the integration process. We've started the people who are working on putting the two companies together or have started the operational work. We have validated the synergies. So we talked about 95 million of synergies from this transaction. And we're very happy with those and feel super comfortable with those. And we have also set up an integrated Nordic management team that will lead the Nordic entity, including some people from top that have now become part of the If executive team. Next steps are that we'll update on transact or on restructuring costs in Q4, and then we'll start reporting properly on synergies and the new structure in Q1. What about the results then? Well, I think there's a couple of key trends, but before I go into those, let's take it at a high level. Profit before tax up 11%. That reflects strong progress on the underwriting side. Underwriting result was up 31%. So that partly reflects that we had some weather claims in the prior year. However, I think more importantly, we're seeing 10% top line growth year on year, and we've seen positive development on underlying underwriting margins as well. So on the underwriting result, excluding volatile items like large claims and weather and so on. So really strong business momentum, particularly actually in the UK, and I'll come back to that in a second, but also in the core Nordic business that continues to develop very well. So let's dive into a little bit more detail, and I'll start in the UK actually, given that had such a strong development this quarter. The underwriting result in the third quarter is up 82%, driven by a number of factors. The most important, I think, and the one that we're most pleased with, is that we're continuing to see very strong top line growth in the UK, driven partly by the pricing action that we took in the second half of last year. Remember, the UK market was in a more challenging position at that point, but we were very early to recognize that and price up for inflation and get our rates to a point where we're happy with profitability. However, what we're particularly pleased about this quarter is that we've managed to, for the second quarter in a row, to grow the customer count also in the core motor product. Remember, in the UK, we're very big in motor. We have a smaller home insurance business. We've had to be quite disciplined on the motor side over the last few years because the pricing just hasn't been there to grow. But now we've had the opportunity to do so. And we actually added almost 160,000 motor customers in the UK during the third quarter alone. So that's a strong result. We've also continued actually to grow the home book, which has been more stable. Or the market conditions there have been more stable over time. And we're up at almost 700,000 customers in home insurance now, having started from almost zero a few years ago. Very important here is that we haven't sacrificed margin to achieve this growth. We've actually improved the operating ratio, as we call it, for Hastings. It's a cost ratio that includes costs and claims. So a lower number is better. We've actually increased our margins year on year, and we're at the point now where we're delivering very attractive returns, and we're happy with margins. Let's move to the next area then, which is the Nordics. Of course, the vast majority of our business. We have had a very good top line momentum, so premium growth momentum in the Nordics over the last couple of years, and that continued into the third quarter. There was a couple of technicalities that made the headline numbers look a little bit lower, to do with the inception of when a couple of large contracts start. The date from that was moved forward, but underlying the momentum is very strong. And we can see that when we look at our key target areas. So we're growing in products like personal insurance, home insurance, with SME customers, which are all areas where we want to grow. We're seeing the digital sales grow attractively as well. And probably most importantly, we're continuing to see high retention amongst our customers, even though we continue to price for claims inflation. Interesting to note here, I think, as well, is that actually within Top Denmark itself, so we still continue to report Denmark as a separate segment in the business, we have seen an acceleration of growth over the year, partly driven by pricing and high retention, but also partly driven by a positive net flow of customers into the group. And in the Nordics, I'll just obviously important point is to mention that margins continue to develop well. So we're on a positive track, and seeing a similar type of momentum on margins as previously. Good. Then just to round things off in terms of outlook and in terms of where we're looking into next year. We're performing well against our targets. We're a little bit behind on the operating EPS target. That's mainly because we had the harsh winter in the first quarter, and because we had very, very low realized gains on investments in the third quarter. But if you strip those two things out, the underlying momentum is clear, and we're still, confident on that number into the full year. And other than that, we're very comfortable on all the other metrics, and continue to be very happy with the momentum in the business. That was it.
Perfect. Let's jump into some questions. There's a question on the retention rate in the UK. You look very strong in the Nordic. Is the UK the same? It's a good indicator. You're growing very strong, but is it getting more customers in and getting unsatisfied customers out, if you understand? But I think I read your reporting. I couldn't find that. I don't know whether you give that, but can you give some kind of a sense of retention rate in the UK as an indicator?
Yes. In the UK, the retention rate is not as high as what it is in the Nordics. It's not a number we've given publicly because we think it's a bit competitively sensitive. But it is somewhat below where we are on the Nordic retention. And there's a couple of reasons for that. The UK inherently is a market that has higher churn, so it has more customer switching than the Nordic has as a market. For us as a business, for Hastings, we do have a retention that's a little bit better than the market, so we are outperforming slightly on that. But there's the sort of inherent switching in the market that's more prevalent. And then, of course, the other thing is that prices for customers is still going up a lot as they renew, because most of the pricing changes happened in the second half last year. So up until about the turn of the year, when customers get their bills, they see big price increases, and that's often when you change your company. The flip side of that, though, is that we have had very strong new business volumes. Yeah. So when there's a lot of, and it benefits us actually, because we're a big player in motor in the UK, but we're not one of the biggest. We're at the market share of about 8%, and the largest players have closer to 20%. And we obviously are trying to grow. So when customers are looking for better deals, we're in a good position to offer it to them. So, and that's why we're seeing this, or that's partly why we're seeing this strong growth come through.
Yeah, I guess, as you said, the flip side of that is that if there's a lot of switching around, which shows up in the retention rate, it's good to be the smaller player also, or one of the smaller players. And looking ahead, you said there's still some price increases. Is this a, it's a very high growth number in this. I guess you're moving out to new insurances, and I know you won't guide on the future, but is that a sustainable level, or is that a very, if you understand what I mean, a special situation in the UK where if you do good, there is a lot of switching by the customers, if you understand the question.
Right now, it's still a special situation. Actually, over 2024, pricing has been quite stable. At the market level, it's even come down a little bit, but we're still seeing that effect that I mentioned earlier from the previous year. That has really sort of pushed up the renewals price, because just like in Denmark and other places, customers usually renew one time a year. So you're seeing that price increase from last year still coming through. But going forward, I mean, where we are on margins, we are in a happy place, so to speak, on margins. We're performing where we should be. So this, we need to price for increases in expected claims. So claims inflation, if there's changes to the rate at which accidents happen and so on. But we don't see a need to increase margins in the UK.
They actually look. I would have thought the competitiveness in the UK market and this model, there's over there, would actually have made your operation margin much lower than the combined ratio, but it is actually not so. So that was very interesting.
It's a model that works very well for the strongest players, and we would argue, of course, that we're one of the strongest players in the UK.
Then there's a question, and I guess you haven't seen that. Have you seen negative effect on Top Denmark's results after the acquisition? Meaning, there could always be a pushback and on uncertainty and so on, but that looked very strong, the growth rate there, compared to what I've seen from the other Danish players. So not to take your questions, I guess there's always some jumpiness around when something new happens by clients, but any feel of you have seen anything there of fear of seeing anything, because of this?
No, we haven't seen anything. Hey, like you say, it's always something new for the customers, and I think in particular for the employees, actually. From the customer side, we're still operating with the same brand. It's something that's known that happened, but it's also not necessarily something that, it's not like the customers are getting anything different now than they got 3 months ago. So far, no impact. And we're doing this to make it even better for the customers, right? We're doing it to bring down, improve the service, improve the proposition, bring down costs, and as we do all those things, there are also benefits to customers. I'm sure we'll see some amount of churn. There always is in M&A, but I don't think it's going to be so significant that it's going to affect the results in any way. On the employee side, I think we're very happy with how the integration has started. People are enthusiastic about getting to work on bringing these two companies together, and I think people see that being part of a big Nordic entity has a lot of benefits as well.
And then looking at the competitive side, I kickstarted a consolidation. I don't think you kickstarted that. You have done that for many, many years, and Tryg has done it. But you put an extra spin into it by this total integration with Top Denmark and the exchange of. Have you seen anything yet in the marketplace? I guess we always need to ask that on an insurance call. Seen any reaction, anything changing in the competitive landscape?
We have seen in Denmark specifically, we have seen the market react to what is some slightly challenging claims trends at the market level in terms of inflation in particular over the last few years. And we're seeing and hearing our peers talking about the need to price for that. But I would say that all of that are things that are nothing to do with this transaction. No. They are, modern cars, as good as they are at, or they're better at avoiding accidents than older ones, but they're also much, much more expensive to fix. If you try to fix a new car or an electric vehicle, that the spare parts can be incredibly expensive, and often you can't repair to the same extent as you can with old cars. You end up having to buy new quite big parts as replacement often. And that drives up the costs in the system.
And that means that what you're seeing is actually that they are still trying to regain that claim, and meaning they're not trying to compete, they're trying to regain that claim. And I actually think you mentioned that in your reporting that you have had quite good experience by by trying to I guess better risk adjust between combustion engine cars and electric cars. Do you feel you have an advantage of having a bigger market to do that in, and maybe more, if you understand it, a better data set to actually go in and evaluate that? And
we do absolutely. We insure more than 2 million cars across the Nordics, of which around 11% are electric vehicles. So we have a lot of data on different types of cars, and actually a lot of data on new cars in particular, because we have such strong cooperation with the car dealership networks in a lot of the countries. And given that pretty much all electric vehicles are new cars, that has given us a big advantage in terms of being able to price for the risks that they bring. And I would say that by and large, they behave like normal or in combustion engine new cars as well. So the difference is more new car versus old car, except that there is a little bit difference in how EVs are driven, a lot to do with where they're driven, etc. So we do feel that we have been able to achieve the same margins on electric vehicles as on ICEs, internal combustion engine vehicles, which is not something that has been the case for everyone. Where there's been even some large companies talking about pulling out of insuring electric vehicles in some markets because it's been so challenging to be able to price for them correctly.
Perfect. Then there's a lot of talk about the weather. Unfortunately, the terrible pictures from Spain and those large, and we are seeing everything. There's a question. It's all weather related, but I think we have 3 out here, but I'll ask them one by one. Has the weather affected the result in 24? How has the weather affected the results in 24 compared to last year? You talk about the underlying combined ratio being better. I know that's where you adjust for that, but how has you been hit? Has this year been worse on the weather and large claims than last year?
Yes, it has been a tough year for weather, but that's not because of flooding or anything like that. It's because in the first quarter we had a very severe winter. Maybe not as much in Denmark, but certainly in Norway and Sweden and Finland. And within If alone, we had about 100 million euros of claims related to that. It's actually interesting because it was the first time since 2010 that we had a winter that was quite so severe. So it's something that we see happening every now and then, rather than something that we necessarily think is a trend. In recent years, actually, the Q1, which is our biggest weather exposure because of the potential winter effects in that quarter, have been a little bit more benign than maybe they have been historically. Actually, in the previous year, though, we did have some flooding claims in 2023. So they do happen, and it's something that something where we're also working very hard to make sure that we price for it as well as possible and as detailed as possible, because these things tend to hit areas in a very localized manner. So it's all about having the right houses in the right areas.
Yeah, and then there's a very specific question here. Finland was hit by all-time high winds recently. How do you see climate impact your apps? And maybe a little bit of talk. There's also, how are you exposed to those extreme weather events like Spain, if they occur in the Nordics? Maybe talk a little bit about your reinsurance programs and how you do that, and maybe talk a little bit about avoidance. I guess that has been also a big part of the insurance industry the last couple of years, that it might be better also to invest into avoidance. So reinsurance and maybe talk into avoidance, and a little bit on the impact in the future on your apps, whether you expect it to be neutral or will hit a little bit harder.
We don't expect, just to tick that last one off straight away, we don't expect, impossible to say about the very far future, but in the sort of years, 10, 15, 20 years that we can reasonably be asked to look into, we don't expect it to really have big impact on earnings as per se. And if it is, it could potentially actually increase earnings a little bit because there'd be more risk to insure. And obviously we take a margin on the amount of risk that is insured. But let me expand on that a little bit. First of all, I think it's very, and you asked quite a lot of questions there. So
it was a reinsurance. How big exposure are you to the events? One event, I might say, or something like that. How are you hedged against each event being?
Yeah, but if I start with the trend and the backdrop in the Nordics, natural catastrophes are not a big part of the premium pool. So even for a home insurance contract, it's only like a few % of the premiums that go to natural catastrophe, because we don't have windstorms and etc. in the same way as you have in a lot of other markets. There are some things like floods. They can be winter windstorms. They can be events that affect us, but they're not so huge that they add lots to premiums. Then the impact from climate change is complex, because on one hand, we have seen some more wet weather and flooding, for example, over the last couple of decades. But on the other hand, we have this thing with milder winters. So it's difficult to know what the net impact of that is for us. Does it mean that we get less frost claims, or does it mean that we get more flood claims? We're going to have to look at those in isolation and really be detailed in the modeling of the risk here. Then it's important to remember that we work with 1-year contracts, and these trends happen slowly over a long period of time. So the number one priority for us is to make sure that we price the risk that we see, and that's what really the most important thing that we can do as an insurance company. First of all, to protect our own business, but second of all, of course, to provide a signal to the buyers, or the people who want to buy protection for risks, of how costly actually this risk can be. In terms of the reinsurance program, we do buy a significant reinsurance cover for natural catastrophe risk. Our maximum exposure to any single nat cat event equates to about 0.5% on our combined ratio. So 0.5% margin for one event. Then you can obviously have more than one event in 1 year, etc. But that's the maximum exposure. And you talked a little bit about adaptions as well, which I think is something that will play actually a really important role into the future. We try and when companies have or individuals have claims, we do try and provide assistance in how to rebuild in a sustainable way that's more resilient towards natural catastrophe effects. But this is obviously also a topic where rebuilding things is a complex process that requires planning permissions, etc. So this is something where we need a broader cooperation than just insurance companies.
Perfect. Then there's a question, what is mainly in your investment portfolio? Is that bonds, or do you also have shares? So just so we can compare you a little bit to the Danish ones, which are a little bit more. I think I saw you had a certain premium of around 4%, but is it primarily bonds you have in your investment portfolio?
It is primarily bonds. Now, so we have almost 90% of our portfolios in fixed income instruments, and the vast majority of that is government or investment grade, and then we have a little bit of high yield as well. Then we have the remaining, actually it's 12%, is equity-like investments. So it's about 8 percentage points of equities and then 4 percentage points of private equity. That's actually a little bit more equity exposure than our closest peers have. And I guess it reflects the fact that we're a long-term investor. We think that over the longer term we can earn a little bit of a return pickup on being invested in equities. And where we are at the moment, it doesn't add so much to our capital requirements. If we were to go to double our equity exposure, for example, or triple it, then we would become much less efficient in terms of our balance sheet. We would need a lot more capital. We wouldn't be able to pay the same dividends out to our investors anymore. But where we are now, because you can diversify equity risk and bond risk and insurance risk, it doesn't add so much to the amount of capital that we need to hold. So we think it's a good balance between making some return on the investment and between operating an efficient balance sheet.
Perfect. Then there's a question on your sensitivity to potential pickup or not in the Swedish economy. It's a big discussion. Interest might go down, might not go down. There are some green shoots in the economy, and I know, of course, you are a more stable business by insurance, but is there any exposure? You know, I think you saw a little bit on your car insurance also in Sweden. You know, bigger cars, I have learned that the bigger the cars is, the higher the insurance premium and so on. But is it something you are following it, or is it too little an effect on your result, whether the economy is going up or might pick up or go down?
I would say that compared to most other companies, it's less of an effect because we are relatively economically uncorrelated. So we are very resilient when the economy goes down, but the backside of that is, of course, that we don't get the same benefit when the economy goes up. There is, as you say, though, we would if the Swedish economy was doing better and people felt more comfortable with buying new cars, for example, that would be a benefit for us, and that could add about 1% or so to our Nordic growth rate, premium growth rate, if we got back to levels of new car sales that we've seen in the past. So and you know, that's a big product for us, as you say. Newer cars do come with higher premiums, so that gives us an extra potential to earn money. There is probably other effects as well, like when the economy is doing well, more people move house. And it's often when you're moving house that you change your insurance. So that would potentially be an opportunity for us as well. But that's probably a little bit smaller effect and a little bit more difficult to quantify than the new car effect.
Perfect. Let's round up with a final question. Any renewed interest from Danish institutional investors after the listing on the Nasdaq Copenhagen? I know we are early days here, but you kind of can see in your meeting calendar what you can book. Maybe give us a little bit indication on how you have been welcomed, especially by the institutional investors, maybe.
I think a very positive welcome. Clearly difficult to sort of very exactly pinpoint the times here, but clearly an increased interest in Sampo as a company now compared to where we were 6-7 months ago from Danish investors. So I think clearly it's been a positive for our investor brand in the Danish market. Let's see, we're about to do the post Q3 roadshows now over the next couple of weeks, and Copenhagen is of course going to be a place that we go to as part of that. So let's see what we hear from investors then. We look forward to going there and meeting them.
I think that was the last question, Sami. Thank you for taking us through your results and answering questions where I think we got a good way around in the result and what is driving it. So thank you for the audience listening, and thank you to you, Sami.
Absolutely. Thanks very much.